Now, if you have even a passing interest in currency markets, you probably haven't missed the ongoing slide in the value of the US dollar recently. Now, this is the dollar measured against a basket of currencies. The dollar spot index fell to its lowest level in almost 3 years, and that was its 7th day of declines. Now, the reasons for the fall? Well, investors are worried about the short-term economic impact of things like Hurricane Harvey that hit Texas last week, and they're bracing for more economic damage from Hurricane Irma. Some analysts say that the enormous earthquake in Mexico that we've been talking about is another reason to be selling the US dollar right now. But a longer-term factor is US interest rates. Investors see the hopes of another rate rise this year by the Federal Reserve fading. And as investors sell dollars, they've been buying euros, and that currency has hit its highest level in nearly 3 years against the greenback. Earlier, I spoke to Craig Erlam, Senior Market Analyst at OANDA Securities in London. I asked him what factors he thinks are dragging down the dollar.
Well, I think there's a number of factors at play. You can't look past the central banks. So the fact that the Federal Reserve appears to be taking its foot off the gas when it comes to tightening in terms of rate hikes is clearly having an impact here. With the commentary we've heard from a number of policymakers now over the last few months has become increasingly wary about the lack of inflation, and in some cases policymakers have suggested that the rate hikes have actually damaged the inflation outlook. As always, these currencies are measured against other currencies. So things like the euro has gained quite a lot against the dollar, and the reason is because their central bank is actually looking to remove stimulus, which is helping which is acting as a catalyst for the euro moves higher. So this also works against the US dollar. The Canadian central bank has been raising interest rates recently, so this is working against the US dollar as well. I think geopolitical concerns is also a factor in this. I think this ongoing war of words and hopefully nothing more with North Korea, I think is weighing on it slightly. And of course, just events at home, political risk, Donald Trump, problems in the White House. I think we've certainly seen a correlation between some of the events that we've seen in the US since last November and the US dollar. And finally, the event risk from the last week or so, these hurricanes which keep causing great damage in the US, the uncertainty around the costs associated with this. All of these factors all coming at the same time is naturally negative for the currency.